Everybody, just making sure we're going live everywhere. And we are on Zoom, YouTube, Facebook, Twitter, everywhere. So I'm just going to make sure it's all working at the same time. Happy New Year, everybody. So on YouTube, you can use the chat on YouTube, and I'll see that. And if you're on Zoom, you can use the chat on there as well. Please don't use the question. Use the chat on Zoom rather than anything else. Give me a shout out where you're from in the chat, whether it's on YouTube or whatever, or Facebook or Zoom. Just shout out where you're from. Let me know. See the diversity. Toronto. Excellent. Anybody on my side of the pond in Europe? Colin, British, yes, no, Colin. California, spent a couple of weeks there last 2 years ago now. Florida, Anthony, could be going there in May, depending on travel restrictions. I want to go to Miami for the Grand Prix. Hey, John, UK. Philly, Rhonda. Ohio, George. Sorry, Bob. I know it's Bob and George. Hey, Jason, how you doing? Took me ages to do my hair. Okay, so this session, like we do every month, is for me to go over the indicators for me to answer questions from you guys. If you've got a specific question that something's not quite working or you don't understand something, now's the time to ask. Okay, so whether you're on YouTube, type it in the question box there. If you're on Facebook, do the same. If you're on Zoom, do the same thing. I'm here to help. You've got an hour of my time, and I'm here to help. And that's the main thing here, that I am here to help. So we had a great session. First sort of inner circle on demand session yesterday. It wasn't fantastic, but we made money. We made $330 ish. Probably some people made more, slightly less, but it was a good return on investment. Another one is next week on Thursday. Heavy day today, on Thursday. So that's why I wanted to do that. We had some great examples yesterday, and we want to continue that with a heavier day on Thursday, so you can see some good examples in there. So it's $60 for the session, trading live with me. Yesterday's session we did about 2.5 hours and made the money, and we didn't decided not to overtrade. Next Thursday, don't know how long it's going to be. Okay, no, next Thursday, Bob, the 13th. I'm going to give you the invitation in the chat links so you can sign up. I know on the Discord group we didn't. Not everybody saw the link, but that's for next Thursday. Plenty of time to get registered, and we'll be trading live. We made some good money yesterday, and we'll do it again on the 13th of January. So one of the first things I wanted to cover today is harmonics. I've had some examples today, both on stocks and on futures. So I wanted to go through those and talk about my favorite thing about is fresh air. So we're going to talk about the entry strategy for these. Slightly different for stocks because they're on higher time frames than futures. So we'll talk about those again. And if you've got any questions, just please let me know and I will endeavor to answer them. So first of all, we're going to look at a stock. This is CrowdStrike. It's on the hourly time frame. So like everything I do, I put support and resistance zones on. So got a major support and resistance zone down here on the left here, and I've got to go back a long way for that to see, for you to see how that is constructed with this low pivot just here that we had a massive bounce off, and these low pivots here. That's that zone there. We've got a massive zone from the daily, not really going to be affecting us for this particular trade setup. So one thing to note is this support level hasn't been tested. Okay, doesn't always. Okay, it's not written in stone. It has to be. Hi, Bando. Then what I've done is also looked at these pivots here, here, and here to form the lower bound of this resistance zone, and then this A pivot here. So this frames the chart. So one of the important things with harmonics is that the D pivot forms in this automated completion zone, which I'm highlighting here and here. You can see it in green. Let me just see if I can actually get that a little bit thicker. I don't know whether I can or not on the completion zone, so just bear with me. Oh, I think we can. We can go a bit thicker there. We go there. I think that's about it. Can't really get that much thicker. So this is the auto completion zone. So for that to happen, a lot of things have to be checked. So there's lots of fib extensions and retracements that happen during this ABC correction that give us that sweet spot for the D pivot to complete. When it does, we have to think it has to move away from there. Okay, so it has to move away from there to give us a decent looking trade. So this is CrowdStrike. It's on the hourly time frames. We're intraday. The market's already open today. We've had the D pivot complete. I mean, yesterday completed here. It's got slightly new low with this first hour today, but that's okay. That's okay. What it's not done at the moment, it's not broken this support. So we just need to give it a little time. So with stocks, I like to use the 6-4 moving average high, which is part of the Elliott wave indicator suite, because that's a what we call a conservative type of entry when we've had a pullback like this D wave here. One of the things I always like to do as well is use the regression trend channel. So you go from the C to the D pivot here, and you click. Okay. One of the big important things here is the Pearson's R number. So when you look at the on the regression trend channel on the TradingView platform, we're going to make sure that we've got Pearson's R ticked. Okay. So what this does, it measures this trend channel in respect of price action. 0.94503 blah, 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 is what we've got there. So that's 94.5%. Anything over 90% for this trend channel is really good Pearson's R number. So it's been an orderly wave, if you like. So an aggressive entry would be to get a close outside of that channel. We haven't had that really. You know, we've had a bit here. We haven't had that yet. So that's an aggressive type entry, but it gives us that performance of that D wave, which is pretty good. It's still finding support in there right now. It's coming down again at the moment. We are getting a bit of a down push on ES at the moment. So the next thing for me is, and this is where I put the order today, 193.20. It was outside of the first hour candle position above this 6-4 moving average high here. So that's a conservative entry, and I'm British, I'm conservative. You know, I don't like to rush into things too much. Okay, so one of the things for me is make sure we've got that conservative entry. So we did have quite a bit of a volatile first hour. We've relaxed and it's coming back down again, back into this zone to test it. So right now, this is a sensible entry for today. Okay, if I then tomorrow wake up in the morning before I go and play golf, have a look and decide, okay, that's still got good criteria. The D pivot's still not broken that automated target zone for that completion. I would probably adjust the stop to just above the high of that first candle today, because it's still outside the 6-4 moving average high for tomorrow's bar position. Okay, so with stocks, we're rarely using that 6-4 moving average high. You can you can switch on your EMA cloud, but you don't really want to be on. I mean, 34 EMA, you can see how far that is away. You're going to be waiting a long time, and you will never get any fresh air. So you've got to be, you've got to be really looking at 13-ish, okay, for your entry, which was around about that 6-4 moving average high. So be aware, if you're using the EMA cloud for entry, you've got to be around for the hour. You've got to be around about 13.21. And one of the main criteria for me is I've got a decent risk reward. So I use that fib extension tool. I adjust it now to this new stop. So I've got a minimum of 1 to 1.6 to this next resistance zone. I've got 1 to 1.8 at the moment. So my risk to reward is still good. My fresh air is still good. Yeah, and that's what I'm really interested in, is I've got enough room for this trade to go. Well, if I'm risking $1,000 right here, potential reward is $1,600, $1,800. So there's a good risk to reward there. If it's 1-to-1, I am not going to trade it. It's about having that fresh air. Sometimes, I mean, this is a crab pattern. It's automatically said that's a crab pattern. And those are probably sometimes the better ones, because we get this big leg down on the D pivot, which gives us that fresh air up to the C and A pivot. Depending on the pattern that forms, if you've not got enough fresh air, you're not going to probably trade that. Or if you are, you're going to be very aggressive with that trading stop, and you're going to be using the manager on a very aggressive setting, day trading aggressive or something like that. So you're not really, the fresh air is the most important thing. And this is with stocks at the moment, that's the sort of entry. Now, the ES trade this morning was the trade you needed to do, and this is on the 5 minutes. So again, this is now futures, and we're going to talk about this European trade this morning. I put it on the Discord group as well. This was a prime example. So again, let's just build this chart up with the A and the C pivot just there. Okay. We also look at this C pivot and look at this pivot just here. This is freaky stuff, but it happens a lot. So this is where we're looking into, to those support and resistance zones. Do we look left? Did it find support at a previous zone? Probably. Let's have a look. Okay, we want to take into probably these pivots here, and the answer is yes. Okay, so we got quite a big pivot down here, and we got these little ones here. So that forms that zone, if you like, and our D completed in the automated completion zone, also in a previous support and resistance zone from the day before. We've got this overnight here, and we've got this one pivot here. It's just one. If we look left, does it coincide with anything else? Actually, it does. It coincides with this support. So again, we're going to be looking at that. That's quite tight, that one. But this is the one we'll be looking at as well, because that's where the support and resistance zones are. So with futures, it's slightly different. We're on a 5-minute time frame here. We're going to be using the EMA cloud. This time the EMA cloud is set to 7. Okay, very aggressive entry. We need a close outside of that entry. Okay, so if you get a massive close and it goes way up there, you've got no trade. Okay, there was no expert algo trade this morning because the criteria for that expert algo to print wasn't here. So the harmonics give you a different type of strategy and setup to trade. It gives you other options. if you're just relying on the expert algo to give you a signal, some days you won't get a signal, and it's just because there's certain rules for that type of strategy. The harmonics, different set of rules, different type of strategy, different trading conditions. So here, remember, we're trading futures here. The fresh air still needs to be about 1-to-1. We're on a 5-minute time frame. For it to be anything more than that, it's very, very difficult with harmonics. Okay. One of the things we really need to be looking at is the manager to help us here. The manager is on day trading moderate right now. Okay. So I want to make sure I've got enough fresh air to at least this C and A pivot, which really was the sort of Asian type of highs. This was the ultimate high, but this really did find good resistance. So when we're looking through this, when we've found this D pivot, it's completed that automated completion zone, starts to move away. We need a close above the cloud. We get that. So then the entry is one tick above the high of that candle, which closed outside of that 7 EMA cloud. Okay, simple. Stop below the D pivot. We're 1-to-1 to here. Okay, that's enough for me, because I know with futures, with harmonic patterns, once we get the move up, I can make this risk free once we get to that first resistance zone. Okay. And as long as that manager ribbon remains green and I don't get some higher than average volume pullbacks, I'm pretty safe to leave that on, because we're on a 5-minute time frame. So trade goes in, we get that goes in about 20 minutes after we get that candle close above the EMA cloud, and that's the entry. But that entry takes us in with higher than average volume, accumulation candle. Then we get another higher high, higher low, another accumulation candle, higher than average volume. Then we're getting these gray candles, which are up candles, which are good. The main important thing here is we're trying to break through the resistance, remember, and it does. But then we pull back on lower than average volume on the manager. Don't panic, okay? Do not panic. The ribbon's still green, the pullback's lower than average volume. It's most likely, 99% of the time, broken through, going to find support here. It did. We then push up again, okay? We now have the situation where we're getting these, the European Open, okay? So this is 7 a.m. Then we get this European Open. We get a lot of sort of big rangy candles, which is normal, okay? But lower than average volume, okay, on these down candles. Don't panic. Let's just take off the EMA cloud for now. Don't panic. Lower than average volume, and then boom, some European data comes in, really helps us out here. We push through that resistance zone, come back and test it as support, but we come back with lower than average volume, okay? I can't stress this enough. You need to follow what I do. You need to understand the support and resistance zones, drawing them in, framing your chart, using the manager to understand that behavior, and you will be able to use the harmonic patterns to give you those signals. Use the expert algo, use the range breakout. The manager is very, very important to maximize those trades. Then we get these highs here, and we get first candle with higher than average volume, down candle, cyan candle. Okay, we get a second one with average volume, but then remember the ribbon turns red at this point here. 4 candles. Okay, 1, 2, 3, 4. At this point here, this is your conservative exit strategy. Okay, and what is happening? We're getting down candles, higher than average volume, down candles, higher than average volume. You're getting 2, time to get out, take your profit, walk away. Okay, so the setup's really, really simple in that the harmonic pattern indicator gives you where that D pivot should complete, and it did. So the hard work's already done. The next thing is to understand that entry strategy, and again, it's different for stocks than it is for futures, and we've just discussed those 2 options there. And again, rewatch the video, because this is live on YouTube, so you're going to be able to watch the recording anyway. And then you've just got to manage the trade using the manager. And what we'll do is in the recording of this on YouTube, we'll put the link to the training for the manager. Okay, so you just got to keep, it's eat, sleep, repeat. Do the same thing and you will maximize your profits. So we've had some pretty crappy sort of range bound periods going into this. Index has not really been great for trading now today. You know, there was this D pivot did complete, but not in the automated completion, just above. Okay, just above. No long trade going into there. And then we had the open, and we've been pretty crappy since then. So the harmonic pattern was to trade this morning. This one completed just outside the automated completion zone. No real trade, and we're going into that pre-market session there. Okay, and to be honest, right now the range is pretty crappy. When we look on the range for ES on the range breakout, we're attempting this to break out to the downside. NQ's finally broken out. Okay, there was a trade there, but you've had to wait a long time for this on the range breakout. You know, we've got that first range, we've got the data range later. You could have broken out of that one at this point, if not there. A better trade for me today would have been the MNQ, because this is exactly what you should be looking for here, is that we get green labels on this, and then we go to yellow, and then we go to red, and then it breaks out. It just break out the New York. It breaks out the London session when the ranges turn to red. That's the trade. Alternatively, we have a great long trade on YM. YM's a very good index to futures to trade on the range breakout. Works very, very well. And just look at this. I just want to make note of this when you're using the range breakout. A lot of the time, if we get a breakout to the upside, you'll see when it pulls back, it finds support at the top of that range, which it did here, and then it's gone again. Okay. Look at the manager, see where it is. But now look at the range, it's turning yellow. Okay. I mean, to be honest, with the range breakout, you should be looking for 100 ticks on indexes, or 75, that sort of thing. This one at the highs here made around about 97 ticks. Not bad. This one was about 50 ticks, this initial move. With this, using the manager, you've got to be very, very patient and look longer term into the session. If you're going to use the range breakout, look on indexes for 50, 60 ticks, get out, walk away. If you're looking on gold, we'll look on gold in a minute, 20 ticks. You know, you need to be just realistic in that if you're going to trade the range breakout and want to use the manager, you're going to be in it longer term for the rest of the session. So you've got to be rare. Shanky, just drop me a message on the inner circle thing, and I'll give you access. Because you're an inner circle member, you'll get access to the manager on TradingView. The next thing is we're going to look at range breakouts again. We're going to look at gold here and look at where my entry, entry today should have been, how to manage it, and everything. So when we get a parabolic move, when we break the range, we can use the manager on aggressive, nothing else. Okay, gold breakouts are on the 5-minute time frame. So we get that first 5-minute candle. The tag is in green. You're only looking for longs, but look left. We've got some European highs to make sure that we get over before we go long. Okay, so we want to make sure that we're broken those before we go. So in this case, we're not going long straight out of there because it could have found resistance and come back down again. That's our sensible entry, because when it pushes through there, you usually get that parabolic move. It's like it's just found fresh air and it goes. It's like a fountain. So we get that move up. Using the manager again, we're going sideways on lower than average volume. Okay, the only higher than average volume is that initial move on this candle here, using the manager. And then it goes sideways, lower than average volume. And then we have another big move up. Then the ribbon turns to red. 4 candles in advance, remember, 1, 2, 3, 4. That's where it turned. that's where you take your profit at that point. So with that conservative entry, you will see 51 ticks. That's pretty good on gold, to be honest. I'd you know, as soon as I get this sort of, I'd be out. And that's me personally. But again, you can use the manager on day trading aggressive when you get these parabolic moves, because unless it pulls back straight away, it'll go sideways, lower than average volume, and get those new highs. And you know, this was a decent trade today. Okay. We did a gold opening range trade yesterday that worked out pretty well as well. It took some heat for a while, but it worked out in the end. Oil today, let's have a look at oil today on the opening range. Now, this is a prime example. Excellent, Wilfredo. Up $510 yesterday on the on-demand room yesterday. Great return on investment. Well done, Wilfredo. So Wilfredo was in that live on-demand session yesterday. Cost him $60 to get in. He made $510. Great return on investment. And yes, Wilfredo, on the YouTube channel, it's live now, so it's being recorded and it will be on the YouTube channel to watch. Thank you very much for coming today, and thank you for yesterday. Hopefully, see you next Thursday for another great training session. So with oil, we got the opening range here at 9 a.m. EST. It printed green. Cheers, Wilfredo. Printed green. We're only looking for longs, okay? It did come down below. We're not interested in the short. See what happened? Comes back through, breaks the upper bound, and goes long, okay? How many ticks was that? With oil, you're only looking 10, 20, 15 ticks, something like that. That was 30 ticks, okay? So with oil and gold, you're only really looking, and when we're putting the design element down for the auto traders for this, we're going to be given options where people want to load up with contracts and just do the 10 tick scalp, 15 ticks, 20 ticks, 25 ticks, that sort of thing on oil and gold. Or 50 ticks, and then obviously on indexes you want to go a little bit further, but we will run through machine learning and look at those simulations to see which ones have the higher in rate. So for example, if it's oil and it's 10 ticks, and that happens 95% of the time when we break out on longs, for example, that's the setting you want to go on. So instead of trading one contract and trying to get 30 ticks out of it, you're going to go 3 contracts and go 10 ticks, because 95% of the time, that's what will happen. And that's what we're working on right now. So again, see how that comes back down. Doesn't even break the lower bound of the thing. And then when it comes back out, trade it again. Okay? That's the whole idea with this. Yeah, because you got that data point with the, you've always got to be careful of the inventory reports on oil. And again, we want to make sure you're out that or go to break even with those data points as well. Again, what you can do, okay, we've got the gold pit open. No, let's go gold. Sorry. I'm going to go to platinum on here. So the gold pit open is also good for other metals, okay? Because whether it's Europe or New York gold pit open, it's when lots more traders start to trade, okay? That metals in across the board, okay? So you could still use the New York gold pit open for platinum as an example, okay? Goes a very, you wouldn't probably use the European one because there's not many traders that trade platinum during the European mornings. A lot of gold traders, a lot of silver traders, but not a lot of platinum. But you can see here we use the same range breakout strategy on the indicator here. We get that first 5-minute candle on platinum, and then it just breaks out and goes hell for leather. Okay, we pull back in again, okay, and then it goes out and then it goes again. Okay, so there were lots of opportunities to trade platinum today, and that move was 69 ticks. That's not bad. That's not a bad move. And the main thing is we're above the resistance zone. Okay, that's where that recent resistance zone is. So don't just tie yourself to gold. Look at other metals for that gold opening range. Platinum, prime example. I know Jason trades platinum a lot. And this was a great looking trade. You know, when it comes back down into this opening range and finds support and goes back out again, you've got two options here. Trade it coming back out of that opening range because it will lift off, and it did, and then you can use the manager again to manage that trade. Or you go to here, no, not that one. Where is my, gotta find it now. Okay, there it is. Let's go to platinum. Again, in conjunction, you're going to be looking at, you know, look at this on the 1 minute, 5 and 6 star buys, expert algo. Okay, there are plenty of opportunities. Let's just change that to the 3 minutes. Okay, look at that 6 star buy. Okay, that's when it comes back out through the range, 6 star buy on the expert algo. So you've got plenty of opportunities. Again, not everybody's got a lot of screens like me, but like we did in the session yesterday, I had this screen over on the left. I had the breakouts in front of me. I had this screen on there. So I understood what was going on with the expert algo, if there was any harmonic patterns forming over here. I've got the breakouts here. I've got the auto trader up there. And you know, if you're going to take this seriously, you need to be able to have multiple screens. Or top tip, get one of these. Oculus virtual reality. There is some great software with virtual reality where you can, if you only got one screen with your desktop, there's a bit of software out there that is phenomenal. It's, you put your virtual reality headset on, and all these, you see all these tabs here for all these screens. You can put them as separate screens, and it's all in this curved environment. And there's one up above, so you can literally grab it with your hand, bring it down, and it's all in front of you. You can have 10 screens if you wanted to, all works. And just recently, I put my first live trade on in virtual reality, and it works fantastic. So instead of buying lots of screens, buy an Oculus VR headset and do it in virtual reality. It's amazing, absolutely amazing, love it. We got somebody on Twitch just joined us as well. Very good. How are you doing? So again, it's about understanding that we've got some fantastic strategies that give you signals. We've got an amazing manager that helps you manage the trade. There are different market conditions that will give you different signals. So, you know, expert algo, harmonic patterns, range breakout. So there, you know, those three tools give you signals for different types of market conditions. The manager helps manage in all three circumstances. Obviously, then there's things like the roller coaster, the Elliott wave, that sort of thing, mainly predominantly for stocks. But again, it depends on what you trade, what your account size is, and you know, the type of strategy you want to use. Cryptocurrency is exactly the same thing. Futures and cryptocurrency, you know, they behave pretty much, you know, very, very similar. Have we got any crypto traders, any crypto day traders in today? Probably not. Okay, so before I go on, does anybody have any questions on the expert range breakout, the expert algo, the harmonic pattern tool, or the trade management tool, the manager? Now is the time to ask your questions. If you're unsure about a specific setting, an entry strategy, or something like that, before we move on to look at a couple of other examples. And obviously, what I want to do is I'm going to look at a little bit more on the range breakout with the indexes as well. So please, whether you are on Twitch, Facebook, YouTube, Zoom, whatever, someone's put the Anthony Ingressos, put your hand up, okay? Please use the chat box. So in Zoom, you'll be able to wave your mouse across the screen that's being shared, and you have the option to open the chat box. Click, make sure it's to everybody, and then put your question in there. That'd be brilliant. Shanky, we're going to look at harmonics as well on larger time frames, and we're going to again. I talked about earlier about the risk to reward and the fresh air, so we're going to go back over those as well. No, on the bits, it's not support and resistance. Those horizontal lines are for targets. Okay. So on bits, it's for targets. So if I switch bits on here just for an example, so I'll answer those in order. So I'm going to go to bits. So this is a breakout strategy, and it's got targets. They're just targets. They're not support and resistance zones. Okay. So when we get this real compact here, and we get this order, these vertical lines above are just target points. Okay, that's all they are. We get this, that's what they are for. They're target points. So this one here, for example, this signal gets triggered here. This point here hit the third target point. Yeah. Hope that helps. Let me just open my currencies chart package. So expert algo currencies. We're going to look at forex for Anthony. Okay, so we want to be looking at currencies. We're going to be looking at euro, US dollar. So this is how I set up my currencies chart package. So on the bottom right, I've got the 10 minutes. So that's my range breakout, if you like. Okay, that's my range breakout strategy. I've got 5 minutes up above, which I've got the harmonics on there. I've got, I can put a divergence cloud on if I wanted to. I've got X-Brad algo, that sort of thing. And then on this side, whether if I'm going to be scalping or if I've got the 3 minute time frame, again, I'm going to just switch the bits off for a second because that might confuse you. I've got X-Brad algo on there, which is the main sort of thing here for X-Brad algo. So, Anthony, is there a specific forex pair, or do you use currencies futures that you trade regularly? So the best thing to do is, have a look at that particular pair, and we'll go through there. So if you just put that in the chat, that would be great. Yes, Shanky, the best thing to do with the harmonics is does harmonics support it? Do we get a 6-star buy or an Elliott wave buy? Does harmonics support it for now? Don't look at harmonics for the first point on the weekly or daily. GBP USD. Okay. I'll find it somewhere. Okay. So one of the things the first thing I'm going to do is look at the range breakouts. Okay. So with range breakouts, I've got certain points of interest for me. So I've got the Australian Stock Exchange Open, always got that on my chart. Whether I'm in that time zone or not, that's a very, very strong opening range for any forex pair. Okay. I've already have that gold European Open, which is 8 a.m. European time. And I have the London Stock Exchange Open. At this point here, you can see I've got a data point. I can switch those off. PMI, so I can switch those off for now. So if there's PMI data, I will have that on. So with the opening range indicator, I can switch those on and off. So if there's no PMI that day, then I won't have it on. I'll just select no. I can change the time frame if there's other data that's going to, do it. If there's no data, the data today was at 9:45, for example. So I'm going to put that in there just to show you 9:45 a.m. EST. And I'm going to put that on there. So that was the data point today. So the first thing to do is, we're looking at opening range trades. So I get so, for example, European morning, 8 a.m. we get that first opening range. And remember, when we're using currencies, we're using the 10-minute time frame. So we get a green tag. We're only looking for longs. We then get with breakout, it comes back down to test the bottom of that range, and then it goes up, and we go into London, and then it comes back down again. So that was that initial push there. We get the data point here. The data point today for the US was in yellow, so that's like an each way. So you're going to look for both a long and a short. In this case, it never took the bottom out of the opening range, took the long, the range went green, and it's gone hell for leather ever since. Okay, so again, data points are very important, not just market opens when you're trading currencies. Very, very strong. Also, what I'm looking at as well on the different time frames is the XBRAD algo. So here, going into the pre-market of the US session, but even before that data, I've got 5 and 6 star buy in the 3 minute. And to trade those, very, very simple. We look left. We look at very recent support and resistance zones. So we've got, let me just go left a little bit more. Okay. Just stretching a little bit, but we've got this one here. Okay. That's an important one. Below, we've got, I think really we just need to look at those overnight lows here. That's where, so I frame my chart. I'm looking at 5 and 6 star XBRAD algo signals, but I want to make sure we're through this resistance zone. So my entry is at this point here, as it closes up above. Once we get a close outside of that resistance, entry is here. Okay, that was the entry there. So even though we get the XBRAD signals here, we don't want to go long into resistance. We want to make sure we break that resistance. Once we've broken that resistance, we got to have an entry above that high of that candle. Okay, which doesn't actually happen to this point. Okay, but when it does take us into that trade, we've got a great stop loss here because it's already tried to attempt to push up here. So we've got a stop just below these pivots. Okay, then you can see then we just keep going and going and going and going and going and going. So again, there was a slightly earlier entry using XBRAD algo, but then when we looked at that opening range trade, we traded the data opening range and it went up anyway. And right now, it doesn't matter which trade we're in, the XBRAD algo or the opening range. In this case, there was 2 trading opportunities, 2 different signals, same result in both. But what I would do right now is use the manager to manage this trade on this 3 minute. Be really aggressive with this now. So what we look for with the manager is, at this moment in time, we're pulling back on lower than average volume, these blue dots underneath. Okay, so right now, the ribbon is still green. The pullbacks we've had have been lower than average volume. Unless we get down candle with higher than average volume, I won't be looking to get out of this trade. Right now, the candle's turned red. So that's what's called a distribution candle. So this candle right now has more volume than this previous down candle, which was cyan. So this is, we're watching this live. This is a warning sign. Not necessarily going to jump out right now because we're still lower than average volume. We're just going to be ready. Okay, not going to panic. It's going to be ready to manage that trade. So hopefully that answers your question, Anthony, on forex. You know, mainstay is expert algo and the range breakout. And Australian dollar, US dollar, we'll look at that as well. Somebody's asked for that. And again, so what we're looking for here is definitely for ASX here, but we get no real trades here. My main one here, and again, this is very, very important to me. If I'm trading Australian dollar, US dollar, we've got the ASX open here. We've got this opening range. The opening range for gold Europe is below there. We're green, so we're only looking for longs, but I'm not going to enter this until it breaks the range of the ASX, okay? Australian stock market open. Because it's got to do some decent work to get through there. We get the London opening range here. Again, the tag is in green. We're only looking for longs, but we're not going to break out into that opening range of the Australian stock market. What we're going to do is we know it's going to get momentum if it breaks out of this range, which it does, and then we get out up here when that manager turns red. Okay. So this is Australian dollar, US dollar, the long today should have been, entered here at 72403. The exit was 4 candles down from that. 1, 2, 3, 4. The exit was 72600. So that was the trade today on Australian dollar, US dollar. Now there are trading opportunities with expert algo as well. You've just got to time it right. Opening range for me for forex is pretty much every single day. But you look at here, look at this on the 5-minute time frame. Expert algo 5 and 6 star buy. There we go, all the way up. Really great looking trade there. So sometimes you only get opening range trades on forex. Sometimes you only get expert algo. Sometimes you get both that help you out together, which is phenomenal. Okay. So hopefully that helps on forex trading. Okay. Right, Mark, you just want to see on futures 6 stars. Yeah, 6 star is like a 6-star hotel. It's the biggest sort of trade you can get. Okay, so we're going to go back and we're going to look at futures contracts. So let's look at something totally different for a change. Let's look at natural gas. Okay, am I on the wrong contract here for natural gas? I'll just go on to the rollover contract for now. And the contract must have changed for natural gas because that's very bitty. Let's try something else. Let's look at copper. Okay. Go to 3-minute. See if there's any trades there. Anybody trade copper? I don't think we do. Let's go to something that's traded very regularly. Let's look at, I did want to look at natural gas, but I'm going to have to just put the symbol on for the rollover contract. So we can just take a look there at that. Okay. Quite bitty. One of the things with expert algo is you've got to, depending on what futures contract you are trading, you've got to find which one is in the groove. Okay, that's very, very important. So I know that 5 and 3 minutes on gold is in the groove. Okay, one of the things that's difficult with natural gas is don't trade it very often. So what I've got to do is got to open a chart up, got to see what the price action's like. And see what time of day is best to trade natural gas, that sort of thing. Go to 5-minute. Okay, it's not bad. We'll go to 10-minute on natural gas. I know, 5-minute on oil, for example, is very good trading, but 10-minute on natural gas looks pretty good to me. Okay, let's just go back in time a little bit and we will look at a couple of signals. Okay. So remember, framing your chart, very, very important. We've had a very big pivot just here. Has that coincided with any other pivots? It has in the past right here. So we can see that this is what we call a decision point where markets turn things back around. Okay, it's quite a thin one, but you know, look at this resistance here, look at this support here, look at this support here. Very, very important. If we are going to get signals in and around that zone, we need to make sure we cleared it. Yeah. So when we look at this 5 and 6 star buy, okay, we got to look again. Framing your chart is extremely important. Damien, if you can, please put in all of the different chats link to the videos for that, because framing your charts understands where your risk to reward is in your fresh air. So this is natural gas in the 10-minute. Looks like 10 minutes is the time frame to go. We have got resistance up here, got support down here, and probably a little bit of more support down here as well. But we get a 5 star and a 6 star there. So when a 6 star prints, the entry is one tick above the candle when it closes. Okay, Mark? The stop is just below, to be honest, it's below the recent pivot or just below the support. So I'd probably just go this recent pivot here. We've got support resistance zone. We've got entry. We've got stop. We then just put the risk reward on. What fresh air have we got to the next bit of trouble? Okay. We got a 1 to 1.6. Yeah. For me, that is enough fresh air. The entry is one tick above the high of the six star signal candle. The stop is just below this recent pivot. It's also below this support resistance zone. Put the risk reward on to the next bit of trouble, 1 to 1.6. We're going to take the trade. Simple as that. We move on in time. We get a 6 star sell here after a gap down. Where's the next support? Okay. Not fantastic, especially after the gap down. Not interested on gaps. Look how it comes to test that support resistance again. Freaky. Okay, freaky, freaky, freaky. We get 6 star sell at this point here. Okay, entry. As we look left, we've got this here. That's got to be our entry on below this pivot, not the signal candle, because in very recent times we had a rejection at this point. So even though we've got a 6 star sell candle here, that's our entry. Let's just change that to green. Then the stop will be about there, just above that pivot. Okay, let's just move that there. Okay, sensible trading this. Okay, risk to reward. It's not even 1 to 1. We don't take the trade. It will give you these signals, but you need to understand what's happened recently. Left, those support and resistance zones, very, very important. If your risk to reward, you've not got enough fresh air, don't trade it. Okay. We then get another signal at this point. Let's just take that off. We get a 6 star candle there. Okay. We've just seen we've got an entry here. No good. We've got support here. So what we're going to do, if we're going to go short here, we're going to go short below this support. Where's the next support? At this point here. Okay. This is the one we're really interested in because that's a massive rejection there. Okay. That's the one we're interested in. So again, we go through the same process. We need to enter if it breaks this support at this point here. Stop loss just above the recent pivot before the signal candle, just here. What's my risk to reward to the next danger? 1 to 1.6. Gonna take the trade. Just follow the same process every single time. 6 star candle comes. Where's my support and resistance? To be honest, you should have framed your chart already before any signals come in. One of the first things I did in that live trading session yesterday was to put all my support and resistance zones on to frame those charts. I didn't do anything until that was done for the day. Okay. We then move forward. Let's just move this support and resistance zone, keep moving forward. Again, 6-star sell going into the support. Don't short into support. Okay, let's just extend that out a little bit further on this way. We get a 6-star buy candle here. Coming off that support, looks pretty good. There is the candle. There is my entry above. Where's my stop? Just below this pivot point here. What's my risk to reward to the next resistance zone? Not very good. Not going to take the trade. Okay, and just go on and on and on and on. And that's how you would do it. Okay, this 6-star sell here, we've got to take into account this support and resistance zone here. Very strong one actually. Okay, 6-star sell. Actually, the candle breaches that. Okay, where's my next support? Try that one again. To be honest, that's a stronger support than the pivot. Okay, you can see how we get lots of tests at this zone. This was just one test. Okay, so again, what are we looking for? We're looking for an entry one tick below the 6-star signal candle. Stop loss just above this pivot, just before the 6-star candle. What's my risk to reward? 1, 2, 3. 1 to 1.6. That's not bad. There's my stop. Enter the trade. Use the manager to manage the trade. Even on this pullback here, ribbon stays red. Ribbon stays red. Comes back down again. Comes back down again. Eventually, the ribbon turns green about here, goes flat. So you just take a little bit of profit. Don't always get runners, but when you get runners, they really, really run. This 6-star buy here, look at that previous support and resistance zone. Are you really going to take that? Ooh, not going to go along into that resistance. When it breaks up, it goes. Okay. I'm not a big trader of natural gas, but you can see there, when we get the 6-star buys and sells, you need to understand where your support and resistance zones are. You got enough fresh air, and when we find that fresh air, they do run. Okay. Does that answer your question, Mark, or is there a specific futures contract that you trade all the time? Okay, because we've got about 5 minutes left, guys. So any more questions, please let me know. No problem. Just a quick one. I know Daniel and a few others, even in the US, trade those European opens. One futures contract you should look at is FDAX, or the DAX index. That really sets the tone for the European morning for your US indexes as well. But one of the things that is phenomenal to trade is the opening range trade on the DAX. Okay, that's 9 a.m. European time. More often than not, you get a fantastic move on this. More often than not. So again, it's the 15-minute opening range that we use for indexes. So whether it's US indexes or European, it doesn't matter. First candle prints green, only looking for long. Boom, there it goes. Okay, it happens so much. Okay, so opening ranges for whether it's data, whether it's the opening of a particular market. If it's indexes, it's the 15-minute time frame. If it's currencies, it's the 10-minute time frame. If it's metals or energy, oil, gold, platinum, it's the 5-minute time frame. So again, we're going to go up. Metals and energy 5-minute, currencies 10-minute, indexes 15-minute. But that still could be for data as well. Okay, so this is just a prime example on this. This is one of my trading screens that I have. I've got the CAC, I've got the FTSE, and I've got the Spanish, the IBEX. Don't trade that very often, to be honest. But opening range for German to DAX today, phenomenal trade. Same for the FTSE. Yeah, really great trade. CAC was okay. To be honest, I didn't trade that anyway this morning. But what I'm trying to show you is that it works very, very well. But always keep in mind the opening ranges for a specific, for data. Okay, very, very important here for data as well. So we can see that, trade of the day today, this is my trading screen for the US indexes. We're going to go use this for the last example here. In that, the opening range for the New York Stock Exchange is here. That's printed in green, only looking for longs at that time. This is the data that came out, the data that we had today. Where are we? Market Services PMI. Okay. This is 15 minutes after the market's open. It says 15:45 because I'm in Europe. Okay. But this was the data point at this point, and you can adjust those data points and switch them on and off if there's no data. But for me, it's very important that I'm not going to trade long out of this New York Stock Exchange opening range, purely because 15 minutes later, I've got another big data point, PMI, which could shift markets totally the opposite way. I've also got the London open as well. So I've got those ranges on my chart. And the bias for those ranges will change. You see it change from green to amber to red. Look at what happens once it changes to red on this candle. We break out short of the London opening range. That is the trade of the day, just there. Okay, that short here was phenomenal. You take the short, and this was, let me just look at this. This is RTY M2K, 180 ticks, guys. Okay, if you'd have put an automatic take profit limit on 100 ticks, bang, 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 you'll get that 80% of the time. Okay, so it's about understanding what's going off in the markets, understanding you've got data. Where was the opening range for London? Remember, that London opening range is also the DAX opening range for Europe. Very, very strong. That the DAX leads indexes during that European morning. Then the New York session opens. That starts to lead everything as far as US indexes are concerned. Then we've got that data point. That data point gave us an indecision doji for that 15-minute candle. Then we start to move down with higher than average volume. Look at the manager telling us a story there. The bias changes for those opening ranges to red. We're going to trade going out the bottom of that London opening range. We go short. Fantastic trade. Okay, understanding that. Hopefully go back, watch this video, understand these different types of market conditions and different types of strategies to trade those. Okay, again, very, very simple if you follow the rules and frame your charts. Okay, so thank you, whether it's on YouTube, Twitch, Facebook, Twitter, on Zoom. Thanks for coming today. The recording will be on the YouTube channel. Just going to put a few more links in there tomorrow once it's all done. But other than that, great trading yesterday. Again, I'm going to put the link to next week's live trading. Again, Wilfredo came yesterday. He spent $60 to get into the session. He won $510. So it's just a prime example of, I'm going to do these a couple of times a month. I'm going to put that in the chat everywhere, the link to register for next week's live trading session. I'm going to put that again into there. Inner Circle members that pay are already in there anyway. Well done, Colin. 2 trading days using the indicators, $410 and $530 profit. It works as long as you're disciplined, you frame your chart, look at the fresh air, the risk reward. It will work. So hopefully you can join me on next Thursday on the 13th for a live trading session. I use my indicators, okay? And we had a good session yesterday, a winning session. Can't guarantee it, but if there's no trades, I won't take them. And that's a good learning point as well. If we were doing that live trading today, we would have taken this trade down here. Phenomenal trade, love it. Okay, so thanks for coming today, guys. Hopefully see you next Thursday. Recording for this session will be on YouTube. And hopefully for those that don't come to the live training session, I will see you at the beginning of February for our next live webinar to help with the questions and everything like that. So unless there's anything really dire, I'm going to finish now, going to have my dinner. It's 7:30 p.m. at night. And tomorrow I have got a big golf match, so I need to get my rest. So thanks for coming today, guys. All the best for the new year, and let's make this a great 2022 for your trading. Let's use these indicators to make you profitable consistently, using that manager to manage those trades to maximize your profits for no matter what strategy you're getting into these particular trades. So see you all soon. Thanks for coming. Cheers, everybody. Cheers, Jason. Cheers, Bando.